Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another Velocity Banking review. This time with the emphasis on paying off debt with the personal line of credit. So, what is a personal line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. Almost like a credit card, but even better than a credit card in many ways. Number one, it has a lower interest rate. So you see this interest rate right here at 13.5%. Number two, I can use it to pay anything. Okay. So you know how a credit card, like you can't use it to pay other credit cards or other loans? Well, unless you're using like Plastique or plastic.com with a Q. You can do that with the personal line of credit, pay anything, everything, right? And so here's my 15 grand personal line of credit at a 13.5% interest rate, and I haven't even used it. Isn't that crazy? I didn't even use it. But we'll just do an example of paying off debt using this thing called Velocity Banking. And what is Velocity Banking? It's basically throwing all of your income at debt with the help of a line of credit. So here we have one credit card, one buy now, pay later loan, one auto loan, student loan, and mortgage. And then you have your food, gas, insurance, and all that other good stuff. So what we do is when we do the velocity banking side, we just kind of copy the same income and expenses, but our savings goes to zero. Isn't this is very unusual because most people, even though they're broke, they're afraid to actively not save money. And so what we're going to do is throw all of our money into debt and have an idea called cash flow, which is very similar to savings. And if you take a look here, I don't have any savings at all. Savings is a joke. As soon as I get paid, I'm throwing my money into my line of credit. And we're also going to assume we have access to a $15,000 instead of 8%. We usually use 8% because I got a home equity line of credit at around 8. And we're going to use the 13.5% number, 13.5. Oh, does it round up? Let me kind of format this correctly into two or yeah, one decimal place, 13.5. All right. So now what we got to do is just move some debt into the line of credit. And here's a secret to getting credit. Okay. Here's a secret. Banks don't lend money to people who need it. They don't. They don't lend money to people who need it. And if I just kind of do a quick Google search for personal line of credit, okay, you'll find many, many lenders, right? Many, many lenders. US Bank, Regions Bank, PNC. I don't know if Capital One actually offers it or if it's just an article. Sometimes banks have articles about the product. Credit Union, Virginia Credit Union. Ooh, up to as little as $1,000. VACU. That's a great name. Virginia Credit Union, First Premier Bank, First National Bank. And you know what's funny? If you ever look up Zelle and all the banks that Zelle supports, all these banks have very similar names like Liberty, First, Savings, and it's like so hard to tell one from another. So that's why I gotta, you know, come up with a unique name that people remember, like SoFi. I remember SoFi just like I remember Zelle. I'm not gonna remember First National Bank. I really won't. But all these banks are successful in their own right, which is why they have a ton of money to lend. And so back to my point, banks don't lend money to people who need it. Okay. So you got to make sure you got the lines of credit before you ever need it. So, but if they did give you a line of credit at this point, personal line of credit. Okay. What's the difference between a personal line of credit and a home equity line of credit? Is that with a personal, it's usually unsecured, meaning you don't have to pledge an asset to obtain the line of credit. Whereas with a home equity line of credit, you're pledging your home equity. Home equity. Okay. And it only applies if you have home and you have something called equity, which is the amount that I'm sorry, it's the home price, the estimated home price minus the amount that you owe, right? And you get the estimated home price by something called comparable sales. So if nobody has sold a house in your area, good luck determining that. Am I right? Okay. All right. So let's go ahead and move these two debts to the line of credit. And how do we know which debts to move into the line of credit? Well, we're going to use something called the cash flow index, right? Cash flow index. So if I just go on Google and just type in cash flow index, I just go here. Well, basically, all it is this formula right here, which is the balance of the debt divided by the minimum monthly payment. And it gives you a number. And the lower the number, that's the one you want to pay off because it gives you more bang for your buck. Right. So that's that's what we do right here. And so we take these lowest numbers, right? 14 and 28, move it into line of credit. And how much is that? It's 15 grand. Oh my goodness, I must have cheated. Right, 15 grand. And guess what happens to these two payments? Oh my goodness, 0, 0. So we go from $1,200 of savings to $1,800 of cash flow on day one. Okay. So let's go ahead and do the math. Right. All right. So now to get the next month's balance it's based on the previous month's balance plus the previous month's interest minus our current cash flow, which is 1836.03. And then what we're going to do is take the average daily balance, average daily, all right, multiply it by the interest rate and then divide by 12. All right. And then for month one, we got to pay $93 of interest. And then we just rinse and repeat over and over again. And we just copy and paste, and then in 9 months, right? 9 months, it's all paid off. All paid off in 9 months. You see how easy that was? 9 months. Okay. So now we just write milestones that we paid off 15 grand, 9 months, 15K. Awesome. All right. That's awesome. So now we are free and clear with our line of credit again. And then now we use it to attack these other loans. So let's go ahead and do that. And that 9 months, what's the balance of these? Okay. It is 17 grand right here. And so we only have a 15 grand line of credit. And I'm still going to attack this one first because it's going to give me the most amount of cash flow. And also, this one has the highest interest rate as well, although the interest rate is not the only thing that affects the cash flow, right? Actually, three main things affect the payment, which is the original balance of the loan, the interest rate, and then the term. The longer the term, the lower the payment, right? What we're going to do is what we're going to use something called a chunking method, which is just moving pieces of the loan into the line of credit. So what do I mean by that? So we have a 17 grand balance here, and then we're going to move about $6,000. Okay. Is this the right one? Yeah. $6,000 into the line of credit, so plus 6000, and then how long does it take us to pay off that 6 grand? About 1, 2, 3 months, right? And then we just rinse and repeat over and over again. And luckily, we have the Velocity Banking calculator for this. So let me just do this. You might be freaking out. 13.5%. Oh my goodness. I think that's my Dave Ramsey imitation voice, but when he is sarcastic. But let's go ahead and just fill in the deets and just do $20,000 balance, 5 years. What's the 386.66? 386.66. Interest rate is 6%. Not 600. Oh no, that's a bad. All right. 17367.89. 17367.89. And then what's our current income? Our current income is 5,500, right? And our living expenses is everything except for the loan we're trying to pay off, so it'll just be all of these. And then I am going to copy this, and it's going to be 3277.31. 3277.31. Okay, 3277.31. And then we just rinse and repeat. So we just do a small chunk. We'll just say $6,000, and then we'll blam, we paid this off in 0.6 years. That was so simple. All right. And again, 13.5% interest rate, not a big deal. And we only paid $456, and we paid it off 0.6 years. That was so simple. Okay. So now let's go ahead and do this. So now 9 plus 0.6 times 12, which is, we'll say 17 months. We paid it off, right? 17 months. And then this is now 0. And then, all right, how much do we pay off? So it's 15K plus 20K, which is 35K. All right. So 35K. And I'm going to do this. So now this is 0. And then, wait a minute. Did I do this? Yeah, 17 months, 17 months, 17, 17. And then we just rinse and repeat again with the amortized loans. Look how easy that is. All right. So I just got to fill in the deets again, and I got to update my statistics right here. All right. So now it's 2843.21. 2843.21 is my living expenses. And what's my payment amount? My payment amount is 434.11. 434.11. Wait, is that right? Did I? Yeah, 434.11. And then it's a 10-year loan. And then the interest rate is 5.5%. And the original balance is 40 grand, 4000. And the original balance is 35576.92. 35576.92. Well, blam. 1.2 years. 1.2 years. Okay. 1.2 years to pay off the student loan? Are you insane? All right. So 17 plus 1.2 times 12. That will be 32 months about. So 32 months and then 75K. 75K. And let me just do this right here. And then here's the thing. If we're at 32 months, let's see how much time. Whoopsie. This isn't right. 32 months. I think we could get a home equity line of credit, right? Because even we've paid off some of the mortgage balance, and hopefully the property will have appreciated. Okay. Yeah. So if we want to get a home equity line of credit, we could probably get it. My first home equity line of credit, believe it or not, was not $280,000. Right? It was 15 grand. And I was like, that is so much. Okay. Like, that is so much. And then my next home equity line of credit was like 52 grand, around 52 grand. I was like, whoa, that's pretty cool. And so the most recent home equity line of credit I got is 280 grand. And you know how I feel like nowadays? I'm like, not enough. I need a little bit more. All right. Isn't that funny how life works? It's just Parkinson's law of money. The more money you get, the more your I guess expenses expand or something like that, right? You know what I'm talking about? It's basically lifestyle creep, or another way of saying that, or money creep, right? So let me go ahead and do this. So in 32 months, right? So I just gotta copy and paste the deets, right? So now this is gonna be right here, and this is going to be a 30-year mortgage. And what's our payment amount, which is 843.21. 843.21. Our total expenses is only $2,000 now, with our general food, gas, insurance. And what's our original balance, which is $200,000. Okay, what's our current balance? It's 188,580.93. 188,580.93. And then our interest rate is 3%. Oh my goodness. A 3% mortgage with a 13.5% line of credit. That's not possible. Sure, we could do better with 8, right? If we had a home equity line of credit. But it really doesn't even make that much a difference. We do 8, 13.5 was like $1,000 difference. Okay. That's cool, man. So here's we have 4.9 years. 4.9 years. And let's go ahead and do this. So 32 divided by 12 plus 4.9. And how many years is that? It's 7.5 years. And we are debt free. Debt free. Okay. So this is how we use a personal line of credit. It's the same way you use a home equity line of credit or any sort of line of credit throughout the years. Okay. So let's just take a look at this, right? 15 grand. And I just go to bank's website, and then, whenever I need the money, I take it at 13.5% interest rate. All right. So let's go ahead and take a look here. Take a look here. And where did I get this from? Well, I learned this from a place called Renata. So this is just my quick pitch and plug so that you can give me money, because I want all of it, right? If you want to know where I learned this from, I learned it from Renatus, and click the Google form link below. So it's an online educational company, where they give you complimentary lifetime access. So if you want to brainwash yourself like I did with all this stuff, I just watch classes over and over again. And eventually I get it. And then I'll just kind of teach it in my I don't know if I want to say teach it, but just kind of semi regurgitate in my own way. But I do resell the education. Right. And then you pay me, okay, pay me the money. And then there's a saying that the more you pay, the more you pay attention. Right. So, you might be like 20 grand, I could be saving all this money if I don't pay you. And I'm like, yeah, right, because you're just going to do absolutely nothing like most people. Um, but that's not saying that. I'm not talking about you. I'm just saying most people, they don't pay attention. Okay. All right. Well, that's it for today, folks. This is Korean Atlanta mentorship. And yeah, I don't even know what to say. People are like, "How do you get a personal line of credit?" My answer to that is don't need money, right? Because banks don't lend money to people who need it. Unfortunately, they don't. All right. Well, that's it. Happy Friday. I might even just crank out a few more videos before I go to sleep. And last words, I love you all. And also join my cult.